biggest secret really is understanding the power of raising capital. And once you develop that, there's certain tactics around the secret to raising capital, but I'll stop there and just kind of talk bigger picture, because most people don't think it's possible and they kind of resist it.
But I guess is what you're saying is the mindset is I'm going to be raising capital for this specific cash flow machine.
Active side with the passive side, it's a 1-2 punch, and people are able to exit whatever they're doing, their medical practice or law practice or their highly paid W-2 practice within 2 or 3 years, and that combination is a very powerful path to financial freedom.
Hello, everybody, and welcome to the Build It to Billions podcast, where we guide ultra-successful entrepreneurs and investors on their journey from millions to billions. We believe that the key to scaling your business and compounding your wealth lies in practicing stewardship over ownership and constantly applying billionaire principles. Our ultimate goal? To help you grow your wealth so you can make a significant impact and give back to whatever causes that you believe in most. And I'm your host today, Brett Swartz, and each and every episode we're joined by some of the world's top entrepreneurs, millionaires, and billionaires. They share their practices, their principles, their values, their secrets, and wisdom with us, providing us with the insights to reach from where we're at today to the next level of success. I'm excited about our next guest. In fact, he's been a multiple guest on the Capital Gains Tax Solutions podcast, first time on the Build It to Billions podcast. And he is on a mission to help all of us grow through financial freedom through real estate investing. In fact, he has a cool entrepreneur investor journey himself. He's also the author of The Secret to Raising Money to Buy Your First Apartment Building. So much more. Please welcome to the show with me, Michael Blanc. Michael, how are we doing?
Hey, Brett. Great to be here.
Great to have you. And we're going to be talking today about the secret to raising money. But before we go all to there, this is for buying your first apartment complex. I want to take another step back, maybe give our listeners a little bit more about your story and your focus.
Yeah, I mean, I followed the blueprint. Get good grades, get a good job. That's what I did. I have a master's degree in computer science, highly educated, Brett. And my first job was, programming, actually. And then in the late 90s, I actually joined a software company called Web Methods, which went public in March of 2000 and put a bunch of money in my pocket, which was awesome. And so I felt like I was a genius. And then when I read Rich Dad Poor Dad in 2004, I felt like less of a genius because I had relatively little passive income. And after several months of confusion, I came home one day and told my wife I'd quit my job to pursue financial freedom. And so I did everything at once. I took classes, I traded some stocks and some options, some iron condors, super cool. I flipped a house here and there. I took a commercial real estate investing class. But my big idea, my ticket to financial freedom, was getting into the restaurant business. Now, this sounds kind of silly, and it is in hindsight, but it wasn't at the time. It was the big idea. I had a magical spreadsheet to get to 20 units. I only got to about 8 before the recession kicked my behind. And I subsequently, I'll make a long story very short, I subsequently lost my IPO millions in the great restaurant experience. And because my couple of house flips worked so well, I decided to flip houses and raise money from people. And so I was flipping houses. It was an awful time in my life because I'm losing money in the restaurants as I'm trying to sell them. And I'm flipping houses, making money. And so it's like this bucket had all these holes, and I'm working 60 hours a week, basically making no money at all. In fact, one of those years I had negative income. That's how bad it was. Almost lost my house trying to get myself out of the restaurant business. And then kind of accidentally got into apartment buildings, which was a nightmare in itself. But what happened after about 18 months is it kind of stabilized itself, and it started sending me $1,500 a month of mailbox money. And that's kind of when I woke up and I realized that flipping houses isn't very passive at all, and that these apartment buildings are much more passive once you do it right. And that's when I really understood the meaning of passive income. Investing in restaurants it was passive in the beginning when things were going well. In fact, so passive that I really didn't know what was going on until all of a sudden I bounced a check. I made some early on in my pursuit of financial freedom. I invested passively in a few opportunities, didn't really know what I was doing. I felt an enormous pressure to deploy that capital to make passive income. I made some really bad decisions, lost a lot of money in the process. And I would do those things a little bit differently over again. And so I call myself the crash test dummy of financial freedom, because I've basically done almost everything there is, and most things that didn't work at all. And then figured out things that do, which is apartment building investing, certain alternative asset classes that people have invested in for cash flow and wealth creation and tax benefits. So a lot wiser, but I've lost many years trying to figure it out.
Absolutely love it. By the way, Michael can be, you can learn more about Michael by going themichaelblanc.com, themichaelblanc.com. I had the privilege to finally meet Michael in person just a couple months ago at the Dealmaker Live conference that he puts on every single year. And it was an awesome conference. This one was happened to be in Atlanta this year, Atlanta, Georgia. So we spent some time together, and we're going to be talking about one of Michael's deals that he's raising for right now. But before we go there, let's talk about the art of raising capital, right? I mean, someone might be passive. They want to go to be active. They want to be an entrepreneur. They scale, right? Scale that syndication or that one-off deal that they've done with the partner, and they want to make it a large operation. Let's talk about the number one secret to raising capital to scale to apartment complexes.
Yeah, I mean, the number one secret to raising capital is raising capital itself, because a lot of people have never done it before. They're very uncomfortable with the idea of raising capital, asking, begging their friends and family because it's awkward, and they certainly don't want to lose their friends and family money, and so they don't do it. And the light bulb for me really went off when I started flipping houses. Now, these weren't syndications, but there were loans, right? 12-month loan or 6-month loan, 12% interest. And it was surprisingly easy to raise money once you knew how to do it, especially after one person was dumb enough to invest with me. I was like, oh man, maybe I got lucky. Let me do it, see if I can do it again. What the realization was that, my ability to do something, anything, starting a company, is not limited by my own resources or the lack thereof. It's on my ability to raise capital and find deals and put these things together. Because as entrepreneurs, this is what we do. We create something from nothing. And raising capital is really the secret. It's much harder to bootstrap a company from the ground up, and takes a long time. It's much easier to sell a vision, to sell track record, and actually bring in capital to accelerate that plan. That's really what syndication is. And you can raise capital for everything. You can raise capital for house flips, for multifamily syndication, strip malls, self-storage, factories, to buy a business, for example. And I love the idea of buying businesses, and buying existing multifamily is one of those things, because it's got existing cash flow, it's got track record. Because as we all know, starting something from scratch is very risky. And so the idea of raising capital for something that already exists is very powerful. So the biggest secret really is understanding the power of raising capital. And once you develop that, there's certain tactics around the secret to raising capital. But I'll stop there and just kind of talk bigger picture, because most people don't think it's possible, and they kind of resist it.
Got it. So it sounds like the first thing is just understanding that it's the art and science of raising capital itself, like really breaking that down and understand that it's like the lifeblood, it's the wind in the sail, right? And it's much easier to raise capital if you can sell a vision, you can sell a track record, a proven track record of cash flow, and then you bring that capital into accelerate. So what it sounds like, and then of course there's tactics that are involved with that. But I guess is what you're saying is the mindset is I'm going to be raising capital for this specific cash flow machine or investment or apartment complex, right? Is that a fair summary so far?
Yeah, that's exactly right. So just knowing that it's not only possible, but it's very powerful to allow you to scale anything. And a lot of listeners here are probably passive investors, are looking to invest passively in certain different things. And I've seen over and over again that a career path for the passive investor is to become an actual active investor by raising capital. Because what happens if you invest once or twice, right? You're like, oh, this is pretty cool, right? You're kind of experimenting on yourself. You're like, oh, this is pretty cool. I made some money. Well, then you start sharing it with your friends, right? And all of a sudden you're like, oh man, I got 4 of my friends in this deal. I should probably get paid for it. I should probably be a GP and get some equity. And that's exactly what happens. Is some of these passive investors, they get so good at understanding the asset class, they become such an evangelist that it's very easy for them to actually turn that into a career path. And not only do you make money as a limited partner or as a passive investor, but you also get compensated with equity on the general partnership side. And that's very powerful, right? Because now you can actually start raising millions of dollars and bringing them into a partnership, an existing partnership that's out buying various asset classes. And that now, if you combine the active side with the passive side, it's a 1-2 punch. And people are able to exit whatever they're doing, their medical practice or law practice or their highly paid W-2 practice within 2 or 3 years. And that combination is very powerful path to financial freedom.
Got it. And Dan, we're speaking with the Michael Blanc. You can find him at themichaelblanc.com, themichaelblanc.com. It's like the Ohio State University, right? I love the way you put that, Michael. But yeah, I want to dive into this part. So that makes sense. The past 12 months, I would say raising capital has become more challenging. I think you probably agree with that, right? Equity, hard cash and equity is king. I guess what's the top myth of what's everything's changed and what's the other side of, yes, definitely some things have changed. Give me the extreme here, Michael. Like really it's not that much different than what it's been. And then give me the other extreme of, well, actually this part of it is pretty different.
Yeah, this part is very different. It's very different, and there's this paradox that's going on right now that's going to be very difficult to navigate. And it reminds me a lot of 2008, 9, and 10 after the last recession, where there was essentially blood in the streets. Right, everybody had gotten into rentals, and then everybody knows at least one person that lost their house in short sale or foreclosure, and the collective lesson was real estate bad. Right, real estate bad. Was that the right lesson? No, it wasn't the right lesson, right? There was a certain unique set of circumstances that led to that thing, and the lesson was not that real estate is bad. And it's something similar that's happening right now. For example, right now I find that you mentioned it's hard to raise capital, and the reason it's not just hard to raise capital for any particular asset class. Investors right now are not investing in anything because they're sitting in money market. Again, 5%, maybe they're putting in the stock market, maybe some bonds. They're like, you know what? I'm going to ride this thing out. And this is going to be a mistake because what's happening right now is there's a stress out there. There's a stress in, well, certainly office building, commercial property, there's a stress there. And the stress in multifamily, for example. And there are operators who are not doing well. They've been unable to deal with the rise in interest rates. They're unable to deal with interest rate caps. And this creates financial distress for them. And those people are starting to sell at pennies on the dollar. And that is an amazing opportunity that we have. Did not see that in 2008 because commercial property, multifamily specifically, was not nearly affected as single family houses back in 2008. So the opportunity wasn't even there in multifamily, for example. Certainly not in office either. And so whenever there's distress, whenever there's blood in the streets, is really the opportunity to buy. But the question is, do we have the courage to invest? And that's the major problem right now. The major challenge is we have this opportunity, but convincing the investor to invest is very difficult. And we find only that the very most sophisticated investors are seeing the opportunity and are positioning themselves strategically to take advantage of it. For example, I don't know, was it BlackRock or some private equity firm went in with 12, I don't know, or more, $24 billion to get in San Francisco and start buying up these office buildings that are almost nearly empty. You're like, those are a bunch of idiots. They're going to lose all their money. Are they? Really? They know something that I don't know. Maybe you don't know. They went in hot and heavy, right? There was the tallest building in Houston that sold like 3 years ago for $120 million, sold at auction for $12 million. It's the tallest building in Houston, right? And so while other people are running, should we maybe look for opportunities? And I think that's where we are right now. And that's exactly what we're seeing over the next 18 months, especially multifamily is what I know most, is really educating our investors to develop the courage now to take advantage of that.
That makes sense. And it sounds like the courage to invest now, knowing that the alternative of just sitting at the T-bills at 5% is really the shift in and I guess the white space there to fill in, right? And I think more than ever, tax flow, not just cash flow, right? And the ability to get a lot of the cash flow offset from the taxes, the ability to get appreciation in an inflationary type of environment, the ability to buy at a discount in a housing market that's 4 to 5 million units short, right? Especially for apartment complexes, just the affordability factor. All of those things play a role into that. Do you want to talk about the live deal, Michael, that you have going now and some of the key things that you like about it?
Yeah. This is just, for example, we have a live deal right now, and I got to be honest, we're struggling raising capital for it. It's a solid base hit, and it's actually a suburb of Atlanta that's doubled in size over the last 20 years, and they're building a bunch of luxury stuff in this area. And this is one of only 3 apartment complexes that is actually affordable, right? And so we really like that about this deal. The other thing is also these deals that we're getting today, just in general, not just this one specifically. This is the other thing I want to point out, Brett, is the deals today, the risk profile is totally different than 2.5 years ago. Totally different. 2.5 years ago, you're getting super high leverage, not just loan to value, but loan to cost, right? So you're actually getting financing for the construction part of your fees. You're getting 80% loan to cost. We're not seeing that today. We're getting like 65, maybe 70 with some pref, and certainly not construction rolled in. So the leverage is much, much lower. Number 2 is the interest rates. 2.5 years ago, the interest rates are all agreed was a historical low and likely to go up. No one knew it would go up 11 times in a row. Okay, but everybody's like, okay, they're going up. All right, so therefore, if the consensus is going up, then obviously it's riskier to get into something when interest rates are going up. Now, for example, the consensus is that interest rates are about flat and to mildly down. So it is at the opposite end of the risk spectrum. Those two together makes that same multifamily deal totally different from a risk perspective than even 2.5 years ago. But yet, people did not recognize this fact. Everybody's jumping in. It was so easy to rent money for syndications because people had made so much money in the 5 years preceding that everybody kind of piled in, and we collectively didn't sense that the risk pendulum was swinging a little bit to the far risk. And now, because we some people who invested got their butts kicked a little bit, distributions have stopped, maybe there's some capital calls, and now we have deals that are on the completely opposite side of the risk spectrum, but they've already like, hey, I'm going to sit this one out. We don't recognize that the risk profile has completely changed. So those are some of the things I like about this deal. Is the risk profile the risk is much lower, and of course it's in a great part of Atlanta. But again, the returns from a cash flow perspective aren't as good as they were 2.5 years ago, right? So we're not selling a 7 or 8% cash on cash return. We're selling more like a 5. Well, shoot, if I'm getting 5% in a money market, it's less attractive. I'm used to 8%. Well, it's hard to get that, but the average annual return is still 17%, right? So it's still, the tax benefits are still there. But coupled together with that fear, and it's not just multifamily. It's really all kinds of asset classes. People are just a bit gun shy right now. So that is our mission, is to educate people about the risk profiles and the opportunities, with the hope that we will continue taking advantage of this opportunity.
Yeah, makes sense. And then again, you wrote the book on it, The Secret to Raising Money to Buy Your First Apartment Building, and you're on a mission to help people do this, that get financial freedom through active investing, raising capital, buying apartment complexes. I'm curious, as you're scaling your business, Michael, and you're scaling your coaching program, and you're buying more opportunities and buying more deals. What's been the one of the best ways or the best kept secrets to doing just that? Building the events, the podcast. Walk us through what's kind of helped you bring it to that next level, and what the courage that you had to have to take that next step.
Oh, from growing the business, from my perspective. I see. Okay. Yeah, that's a great question. And it was really a decision to scale the company. So, before it was kind of me, and I'm heading up every single department. We're putting a lot of content. We're generating some revenue. But 2.5 years ago, 2 years ago, I decided I wanted to scale the company because I felt like the opportunity was bigger. And that may be the case, but I found it very difficult to scale the company, getting over a certain hurdle in revenue, because what you're doing now is you're bringing in a manager level, right? So in other words, you need someone who's going to head up sales. So now you're going to build a sales department. You got to hire a person for that. Then you're going to scale marketing. Well, you might need someone to head up marketing, and it can't be Michael. Then we also invested in paid traffic, so paid Facebook, paid YouTube ads, Google ads, that kind of thing. So if you really want to scale the marketing, it's more difficult to do that organically, because your podcasts or your book are only going to generate so many leads. If I want to 10x the leads, I can't do that. It's very difficult to do that. So with paid ads, you can, because all you have to do, in air quotes, is just spend more money and you get more leads. So figuring that thing out has taken much longer than I expected. And so we're starting to dial it in now, but it's 2 years later, and you're like, my gosh, this has taken a really long time. I've spoken with other entrepreneurs, business owners. I have a buddy of mine who has a residential roofing business, and he bought a commercial roofing business to try to scale that. Didn't work. Went from 7 million to 5 million. Started to lose money. Then his guy left, right? And so as a business owner, I think the hardest thing to do is to start the company. There's no question about that. The second hurdle, though, is when you decide to bring in management and you really try to scale the company up. I think that is the next hurdle. And whatever's after that, I'm a little far away from that, so I don't know. But it's been a challenge. It's also been really interesting to me. I'm just fascinated at building teams, bringing the right people in, building new systems that we didn't have before, and then seeing those things work. I think it's cool. Now, should it not take this long? Yes, that would be great. But then my learning experience is cut short, and that would be sad.
Great insight. And thank you for being so open and transparent too. And it sounds like the decision to scale the company 2.5 years ago. And I'm reading the book, Napoleon Hill, Think and Grow Rich, right? And he says every major thing is basically set by the decision. I just got done reading the chapter of the book of basically the starting of America, right? And how basically two guys, really maybe three or four, but really two, made a decision, right, to start to mastermind and to start to share their thoughts on what a bigger vision could be for the future of America, right? And it was their decision, and then they get in a room with 56 guys, and there's their decision, and it's like this whole thought of like drawing a line and saying, okay, I'm gonna here's is the decision. It's gonna take some risk, and everything's always to take risk, and there's got to be faith, right? And it could crush the company, or it could, and it's like, and then for them it could cost them their lives. Like in this whole thing, it was just it's just fascinating to actually just study the art of making a decision, right? And sometimes it does take longer than you think, right? And so it's interesting that you're in this now. Looking back, by the way, it's been just a couple of years since you've done that. Is there one thing that you would have, you wish you would have told yourself 2 years ago that would have saved you hundreds of hours, or saved you tens of hours, 20s, saved you? What is there anything that you would have shifted at all within this process that you've been through?
Maybe, but there's a lot of things I did right as well. So, for example, one of the things I did right, which I never used to do, is I actually had an advisor, or maybe possibly two, someone who had built a similar company in a different industry that I could bring on, and that person just accelerated everything. And when I say accelerate, without this person, I would still be flailing around. I'd be more like 10 years away from where I am right now. So the way our company operates is like night and day from 2 years ago. I mean, it's unrecognizable. And the systems and the people and the things that he has developed, and his company is 3 or 4 times bigger than mine, has been just invaluable. Really having access to that. And this is a paid advisor. It's not just a buddy that I call every once in a while. And this is the thing that I never did early on because I was too arrogant, because I'm so smart and had so much money. I was like, I'll figure it out. I love figuring things out. It makes me feel important, I guess. And so I did at least do that right. And so I have some advisors around me, and I continue to have different kind of advisors around me in different masterminds, surrounding myself with other people in the space to bounce ideas off of. I would bring in maybe a consultant here and there, a consultant to help me figure out Facebook, or a consultant to help me figure out how to build a sales team, getting the sales process and the offer dialed in. Things that I think I did a lot of things right. If I thought back on what could I've done to make it faster, I'm not sure exactly, because you surround yourself, you come up with some good ideas, you surround yourself with good people, and then you put a plan together and you execute the plan, and it doesn't work. Okay, well, crap. Then you got to come up with another plan. Well, let's try this thing. That didn't work. Okay, now I found one thing that doesn't work. Let's try a new plan, right? And that plan always takes 3 to 6 months to either work or not work. And then you're like, that didn't work either. Okay, well, I learned something new. Let's try that thing. And you keep trying things and until something starts to work. And that's kind of where I feel I am right now. Things that we have done just didn't work right, or didn't work efficiently. We try to pivot that. And so to some degree, yes, you can do some things right, but no one's going to guarantee you a particular result. Even this advisor who has built up a similar training company in a different space that didn't always work. And then to some degree, we didn't always execute well. Frankly, and that's the other thing. So I can have a great plan, but I didn't execute it right. Right? It wasn't done right. It took too long. It just wasn't done right, and now it takes longer to actually execute the plan.
Michael Blanc, so much wisdom right here. TheMichaelBlanc.com, TheMichaelBlanc.com. And by the way, all of this applies to scaling and raising capital, because all of this applies to business and people, building systems and processes and all of that. And so I love the way you put paid advisors, right? different advisors to different consult on different projects, right? Sales team, operations, offer, Facebook, and then finding that person who has already built similar to what you were looking to build. So they've already have a proven track record of that. You're bringing that paid advisor in to help with that. Is that a fair summary? Anything else to add to that?
Yeah, that's exactly right. Yeah, live and learn.
Awesome. Excellent. Okay, great. So those are the main things. I mean, I want to touch a little bit on taxes. Right? I know we touched about this a little bit before the show, right? But there's kind of three proposals, and people are probably learning about it for the first time, Michael, as you are as well, right? But the potential elimination of the stepped up basis, right? So that's a proposal. Whether or not that passes, we'll find out, right? But it's out there. But part of what we talk about with building wealth in real estate is 1031 exchange. Swap it to your drop. Get a stepped up basis, and then your kids can walk away capital gains tax free. So just the thought of that, like if the stepped up basis is taken away, any initial thoughts on that, Michael, and what that could mean for the investor?
Yeah, it would take the fun out of it, right? Take some fun out of the whole real estate investment. I mean, tax benefits are a major benefit of investing in real estate, right? The government has always incentivized people to invest in real estate, provide quality housing, build more housing. And, I understand why the proposal is there. The government needs to kind of raise revenue a little bit, and I understand that. The problem is it's short-sighted, right? If you take away the incentives, people are going to do less of what you want, right? If you want more energy and oil exploration, you increase the incentives. If you want less than that, then you decrease them. And I'm pretty sure the government probably is very well aware of the housing affordability crisis that we have here. And so removing these incentives to incentivize investors to build more and provide more is short-sighted. And I think, I don't know. Whether Biden is elected or not, I'm not sure whether it'll get passed. Maybe not. Maybe something lesser will get passed, because there's a lot of people in Congress and in the government that probably own real estate themselves, and they probably understand the problem. Hey, if we do this thing, then this will happen. Yes, in the short term, we'll increase our revenue, but 10 years from now, we're going to have an even bigger problem. And so it would be sad if that did that, because it would be another short-sighted thing that we do in our government sometimes. But you know what? We'll figure it out if that were to happen, if one of those things were to happen. But it would be, from an investing perspective and affordability perspective, it would be a step back.
Exactly. By the way, there's also two other things on the table. The capping of the 1031 exchange to $1 million for a married couple, 500 single. Also, the increase of the capital gains tax rates from 20% to 44%.
Yeah.
So now more than ever, building a capital gains tax exit plan is so important, because guess what? The government is ready to take a big amount of that. Even with where you're at right now, but people want to learn more, we wrote a book on this. It's called Building a Capital Gains Tax Exit Plan. And so business will be booming should those things pass. We're hoping they don't pass, but if they were, you got to be prepared, and we want to prepare you for it. So check out Building a Capital Gains Tax Exit Plan on Amazon, as well as go to capitalgainstaxsolutions.com. That being said, Mr. Michael Blanc, you ready for the lightning round?
Oh, lightning round. All right, let's do it.
All right. Knowing what you know now, if you could go back to your 20-year-old self and you could sit down with the person that you'd most admire, what's the one thing that they would tell you that would put more millions of dollars in your pocket and save you hundreds of hours?
Well, it would probably Robert Kiyosaki, right? And I wish I had the book when I was 20. I didn't read it until I was, I don't know how old I was, 30, maybe something like that. Yeah, so that would have made a material difference, right? What I'd like to do is I'd like to take the purple book and give that to people, and then the second book that people read is my yellow book called Financial Freedom with Real Estate, because Kiyosaki is a bit silent on exactly how to generate passive income. And the reader is left to their own devices to figure it out, and uses confusing words like cash flow business and real estate. And so you're like, well, that obviously means flipping or rental properties or buying a pizza place, okay? Which it doesn't mean any of those things. And so that's a conversation I would have had, is his idea of, from a financial perspective, as if you're going to provide for your family and you put a financial plan together, then passive income, wealth building, and taxes have to be part of that. And understanding it from an early age would have made a material difference, right? So that would be probably the one thing.
Love it. Question number 2. What are you most curious about right now?
AI. I'm so fascinated by AI right now. And I just actually saw a video by Mike Koenig, who I've heard before, but he put out just a presentation on AI, and the stuff that he does in that 45-minute whatever webinar I saw with AI tools is mind-blowing. And the one quote he said in there, which really stuck with me, is that people won't lose their jobs to AI, but they'll lose them to people who use it. And I think that's the lesson right now. Is I think resistance is futile. Okay, I don't care if you're unhappy about the development of the world. It is. Okay, it is what it is. You can't stop it. You can resist it. You can stick your head in the sand, but to what end? Right? You're only going to be left behind. So the only other solution is to figure out how you can leverage it, how you can profit, how you can manage it, how you can leverage it. Anything, all these things you talked about, about taxes and legislation and this happening, is you can't get upset. Some things you can't change, but you got to figure out how to deal with it. So for me, it's AI right now.
Would you spell his last name?
Yeah, Koenig. That's Koenig. I think it's an S. Koenig. It's actually a German name. Yeah, Koenig.
Okay,
Mike Koenig.
cool. Yeah. It's not a little bit. Yeah, the spelling could be tough for the listener. So thank you for sharing that. And I guess maybe on YouTube you can probably look him up.
Definitely.
Okay, cool. Next question is this. I guess the number one way that you're using Chat GPT or even AI, like what do you feel like is the daily or the weekly kind of thing that's helping you to accelerate your business?
Yeah, I'm kind of a baby user, right? So I'm definitely not the power user, but I am going to start using it significantly. My team has already started using it. They're probably ahead of me in certain discovery. We're using it for writing content. We're using it to produce short-term videos. But certainly for content creation side, there's some AI tools that are really amazing. And again, it's not going to replace anybody. What it's going to do, it might 10x our content output, right? And which is valuable. Now that generates more leads, reaches more people, and so now we can use AI tools to actually produce more content, for example. So, but I'm going to get a lot. I'm going to make it my business to really learn these tools and to really encourage my team to learn those tools and to show me what we can do with AI to make us more productive in our business.
Fantastic. Number one leadership quote or theme that you strive to live by.
Leadership quote. I don't know about a leadership quote, but I'm at the point now where I really focus in on people and systems. Those two things. They're so important. Like for systems, we use EOS, Gino Wickman, the enterprise operating system. It's a great way to a system for scaling a company and how you do long-term, short-term planning, how you conduct meetings, how you hold your team accountable. Number one, and then number two, really focusing on the people, making sure that you bring the right people on so that we follow the WHO process. There's a book called WHO, the WHO, that we follow to interview people and increase the probability you have the right person, and then really holding that person accountable, make sure they're the right person. And if not, making a change sooner. But if you do, then you really develop that person. And so to me, the systems and people, if I'm scaling a company, that's primary, right? Because I can't do it without those two things. If I have a poor system and not the right people in the right seats, it's almost impossible to scale a company.
What's the best advice you've ever received?
Oh my gosh, the best advice I've ever received. So many. Probably the thing that maybe what just pops in my head right now is to develop a morning routine. So I probably quote Hal Elrod, the Miracle Morning, to that. Because it's really a mechanism to center yourself, to become more intentional, to develop clarity, maybe to develop your faith at the same time. And I've always struggled with the morning routine. All the successful people always had it, and I was like, I can't do this thing. I can't sit there in silence for 10 minutes. I drive myself crazy, right? And so the Miracle Morning really kind of provides a framework of what you can do in the first 30 or 60 minutes of a day. And I found that just really actionable and really useful.
Couldn't agree with you more. Michael, last question and we'll wrap it up. It goes like this, right? So at the Build to Billions podcast, we believe that practicing stewardship over ownership and constantly applying billionaire principles is an amazing way to compound your impact, compound your wealth, and make a huge difference in this world. So when you think stewardship versus ownership, what comes to mind? And what's one thing that you're really passionate about by giving back to a cause or a community that you believe in?
Yeah, first of all, stewardship is a very biblical concept, right? And so the thing that it strikes for me is one of the reasons. Apparently, money was very important to me, which is why God put me through the pizza debacle and took it all away. And it was so stressful. It was like the trauma of my life. Other people have health traumas; they lose someone, or it's a relationship trauma. No, for me, it was money. Apparently. and I'd grown very accustomed to it, and I felt like I owned it. And I didn't realize as I was a steward over it. And when it was taken away from me, I learned the difference between stewardship and ownership. So now I have much less attachment to things. I still do. I mean, we all kind of do, but I have less. Okay, less attachment. So I know when I'm driving a nice car, okay, I get to drive it for a time being. I don't actually own that car. So if it's taken away from me for some reason, it's not sad. It's I just got to enjoy it for periods of time. So to me, it takes a lot of stress away, especially when you attach yourselves to things or even people. When you are thinking that you're a steward of something, it takes the stress away, and that I think increases enjoyment as well.
So much wisdom there, Michael. By the way, you know what came to my mind when you said that? Stewardship leads to gratitude. Ownership tends to lead to entitlement.
Oh, that's good. I like that.
And I think that's biblical, right? And the more we can practice gratitude, the more we can practice that, our time is short on this earth, right? And we can be great stewards. Hopefully it's going to lead to more gratitude. So hopefully everyone receives that today and practices that today. Michael, I want to thank you for being on the show. I want to thank you for sharing so much wisdom. I want to thank you for being, by the way, Michael's in the book, by the way, everybody. I did plug this book. You think I was just plugging it for myself? It was part of that. Michael's also in the book. Michael, in fact, has a chapter in this book, and it's chapter number, let's find out, chapter number 11. It's called Multifamily Syndication. Michael Blanc. He's a part of the book as well. And so I want to thank you for being on the show. I want to thank you for being in the book with me. I want to thank you for what you're doing in the community to help build multifamily entrepreneurs, as well as raising capital entrepreneurs to help with the housing crisis, which is such a huge piece of what's going on in America right now. For our listeners who want to get in touch with you, would you mind one last time, what's the best place for them to find you?
Yeah, two ways. If you want to be an active investor, get into capital raising, then you can find me at themichaelblank.com, Blank at the end. And the best place to start is something we call Apartments 101. It's a kind of introduction into syndications, and that is at apartments101.co. And if you're more on the passive side, the investment company is called Nighthawk Equity. So go to nighthawkequity.com. We have some free resources that introduces you to passively investing in syndications. You can also schedule a call with us. So depending on who you are, what you're trying to do, those are the two ways to connect with me.
Michael, thank you so much. I also want to thank all of our listeners for listening to the episode of the Builders Billions podcast. Again, where we believe most ultra successful entrepreneurs and investors, sometimes they struggle on their journey from millions to billions. And we believe that the key to scaling your business and compounding your wealth lies in practicing stewardship over ownership and constantly applying billionaire principles. Our ultimate goal is to help you grow your wealth so you can have a significant impact and give back to the causes you believe in most. Thank you so much for listening. Please share, rate, review, subscribe, give us some love wherever you are consuming the content, and we'll talk to you again real soon. Bye now.